Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I put out a video per week, so make sure you ring the notification bell to get notified each time one comes out. I had a question recently about private equity, and even though I've done a few videos, check them out in the upper corner, I would like to add a bit more information. So, private equity is something for serious investors. Sometimes you need to be an accredited or an eligible investor, which means you need to have or make significant amounts of money, and you can Google those definitions for your province. Private equity are companies that don't want or cannot go public on a stock exchange, but still would like money to grow. So they get investors directly. You are investing in a smallish business directly, but in a vanilla way. That means you just write a check and attend a sales dinner without any board meetings or having to do anything past that. These companies vary, but most are real estate related, such as car washes or mortgage investment corporations. You need to find one that works for you and does what you are looking for. Some have cash flow, others increase in price, and you make money only at the end. Some are tax efficient in paying you a return of capital, so no taxes are paid initially, but they lower your adjusted cost base, so you pay more capital gains at the end, and other investments will pay you interest, which would be taxed fully in a non-registered account. The purchase is usually done through a commissioned salesman who makes 6 to 10% commission from the company. Private equity is a good diversification from stocks because it acts differently. By not being on a stock exchange, you can't get in or out very easily. And so people don't panic and sell based on market news. The investments are typically illiquid with 10 to 25,000 minimums, and you should think of the money as locked in for 3 to 5 years, depending on the investment. Because these companies don't trade on a stock exchange, they don't have the same disclosure rules. You buy it based on an OM, offering memorandum, but my salesman will get me in touch with the CEO of the company if I have questions. Try that with Apple or Microsoft. Having said that, the OM is really your only source of information, and it can be quite misleading or extremely optimistic. Now, some companies send you great updates on a quarterly basis. Others are terrible, and you don't hear from them the entire year. The only sign of trouble that you would get is when the monthly income stops coming. Private equity, even though my salesman claims his company vets the 30 investments or so that he has on his shelf, is the riskiest of all the investment classes. So you should only have 10% of your portfolio in these. And don't listen to my salesman who says you should have 30%. Also, just to add on about the diversification, the nice thing about these investments is that they're not subject to the macro news that the stock market is subject to. So if something happens with politics on the other side of the globe, if there's a war, stocks will generally go down, while these, because they're not liquid, will hold their value, and if they're not affected negatively, will keep paying you the money. So there is that benefit. If you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.